Good day everyone, this is Patrick from EasyFX Code Trading System, and welcome back to my channel and to a new year in 2021. Hope everyone had a good holiday and a break from the pandemic and trading. And let's get back into the new trading year with weekly analysis of spot gold and dollar yen for the second week of January. Let's take a look at spot gold, where you can see the last 3 days has been a massive drop of whole range for the 3 days was about 1,300 pips. Started off on Wednesday and then continued on the Friday with the non-farm payroll news, where even though that the report was bad with jobs lost instead of being added, there was already a rally in the market, so it's been a risk-on rally, and it could be that they have been closing positions on gold to move funds into the stock market instead. But there's a major retracement back down past the 1850 level after climbing all the way back up to 1950, and this is the retracement of this initial drop earlier, where it pulled back to almost reaching the 100 retracement level, almost retracing the whole move, but then fell back to the 38 pip retracement level to hit the 38 pip retracement level around the 1840s. Let's also take a look at the bigger fib, where this was from the high and low of May to the high in July, or in fact in early August, and this retracement back down almost also hit the starting point, but then managed to bounce back up. Now pull back towards the 21 pip area again. So which is at this 78.6, close to the 78.6 area. It dipped down to a low of 1828. So we'll see this coming week if there's going to be a follow through in the bearish sentiment, and that's going to be the key support at the 786 as well as the daily 200 EMA around 1817, 1816, and we'll see if it's going to dip even further to this retracement level at the 21 pip of this fall. So major support here, and in this range as well, down to the 1800 level. If it does pull back initially next week, then there is key resistance around the 62 pip area, and that's where the 55 EMA is. So if it's restricted by that, then there could be further continuation move. You will need to break through that in order to recover further and avoid the bearish move. Right, this week there's only some minor news with US CPI and retail sales. So the non-farm payroll news was basically just baked in already after a strong move rally at last month and early part of the year. That just a couple of days and the start of last week, just to hit the 1950 area. All right, then let's also take a look at the US dollar index, where it has been trying to recover, so which is also why it's driven the other major pairs lower. So after falling for the last couple of months, especially hard, and breaking through the 90 level, now it's climbed back up to the 90 level after dipping below 89, hitting a low of 89.15 and forming a morning doji star here, which could signal a reversal, and it's trying to target the 138 fib here. And if it does break through, then it's going to try to meet the daily 55 EMA. All right, let's also take a look at the dollar yen. And as you would expect, the dollar yen will be recovering along with the US dollar index. And I've drawn this swing high from November to recent swing low of Wednesday, and it has attempted to retrace back to the 50 fib retracement of this move down, but met with resistance at the daily 55 EMA, just close just below the 104 level. So it needs to break through the 104 to recover further. The next resistance area is going to be at the 62 fib at the 104.50 area. This is also a previous swing low from months back. There should be support from the 21 fib area. Then if not, then the 103 is going to be the next level of support. So previously there was a swing low down here. That's way back in July of last year. That's the 104.45. All right, so we'll see next week how much more the US dollar can recover, and major pairs will have to take the hit after strong bullish moves last month or so. Okay, so do have a safe week and a good trading week, and hope everyone have a good start to the trading year, and cheers for now.